Hello and welcome everybody to this week's Middle Class Investor. This is Seth Martin, your host. It is about 15 or 10 minutes till 6 on Sunday, October 1st. So we are officially in the fourth quarter of the year and we'll see what happens. Definitely a lot of interesting stuff going on. The revision in the GDP for the second quarter was 3% or 3.1, so that was pretty good. I think it's important probably here to just say that the economy and the market are not the same thing, so be careful about arguing with yourself. You don't want that to come into your decision if you decide to step to the sidelines. That's what I would say about that. Okay, we're looking here at the S&P 500, and you can see we had an up week, pretty good up week, strong market activity in the S&P 500. Almost the range was almost the open and the close. In other words, we opened almost at the bottom of the range and closed almost at the top of the range, which is it's pretty bearish. Pretty bullish. It probably means there's still more to go in this little move up. You can kind of see there's a kind of a move like this. Excuse me, my allergies have been really killing me. So we might get some pullback, maybe not this coming week, but maybe the next week, into an area, back down to this line. So maybe next week we have another up week, and then maybe we get a doji or something, or we could get something that looks kind of like so with a little tail on it like this, and then we might pull back, down into this area, something like that, and then maybe rally up again. I'm going to show you a chart of a guy that I go to his website every now and then. His name is Daneric, Danerics. Danerics. Elliott Waves is the name of his site. He's a pretty good chartist, and I use his site all the time. In fact, he charts the Wilshire, which is a broader index, and the whole idea, the reason people do things like that is what you want to try to do if you're charting something like Elliott Waves, which I don't do really. I just look, except on the very large picture. But what you want to do is you want to use the market that's the most sensitive to what they call social mood. So that's why he uses the Wilshire. So let me just bring that up real quick and we'll take a look at it. You can see this is the most recent move. Here's the most recent 5-wave move, started back in here. What is this? This is like, I can't really tell what day this is by looking at this. Oh, here it is. This is like August 21st. And you can see that the better part of the month has been really strong. But keep in mind, this is only the last month. Here we are in October. So this is like 2 months worth of data. So the fact that we've got, kind of let me just zoom in on this slide. Whoops, let me zoom back out so I can kind of use the other zoom tool. So you're really talking about to handle this. We could get this tomorrow morning. We could get this the same day and then run up to a new high all in one day, which would finish out this 3. And then you'd have a small 4-wave pullback. And then so next week could be all this. I just want to kind of give you a time perspective. There's not that much time here in this move. This could be all next week, just this up and down, and we have a net positive move up. And then maybe over the next couple of weeks or so, we get a move like that. And then maybe over the next couple of weeks, we get not even a couple of weeks, maybe 1 week, we get a pretty aggressive move up to the highs where we get new highs again. So all in all, this could be 1 week, this could be 2 weeks, so that's 3, and then another week. So we could be talking that from a month from now, So, first part of November, we could be looking at making a top in this market. So I want you to be very, very wary of that. If you'd like, go to Deneric's blog spot. You just put into Google Deneric Elliott Waves, and you can track this. He doesn't update this every day, but maybe at least once a week he updates it. So and as it gets closer, he might be updating it more often. And I think he's a pretty good chartist. He's not always right, but nobody ever is. I mean, that's just not reality in financial markets. So we could be talking about a move up into this 25.40 area, 25.50, and then maybe start to roll over. So start thinking about what you're going to do, if that scenario plays out. And I would say that it's a high probability that that's going to play out, because you can clearly see 5 waves here. And once you have 5 waves, and it could be instead of 4 weeks, it could be 6. I mean, this could happen after January 1st, but I don't think this is going to take that long, because all this happened since August 21st, and August 21st was just not that long ago. So be very wary where the markets are right now, and have a plan. That's all, because after 5 waves, you at least get a pullback to below the 4th wave low, which is down in this area. So, which is not going to be very significant on the markets, but if it's the 5th wave of a larger move, then the pullback could be much more substantial, and you just need to be ready for it. That's all. That's all I'm saying. All right, let's go look at some of the other markets. We like to look at the VIX after we look at the S&P 500, and the VIX is still very, very low. Continues to be low. I don't know. I have not seen the VIX this low. I've been listening to people talk about it. Some people say, "Oh, the VIX is not as low as it was 20 years ago," or what. They bring up some time period. But on my chart, I don't have the VIX ever being this low. Now, they could be. I don't know where they're getting that number. They could be, prefacing it with something that I'm just not aware of. But what's interesting here, I think, is on the closes, the VIX made a little 5-wave move down, which is interesting. Which, waves on the VIX don't mean anything. I wouldn't read too much into that, but I just thought that was interesting. You don't see that happen too often. But I'd say we're going to experience some volatility sometime this week. It may just be a quick up and down, a quick, like this, and then back, kind of drift back down, kind of like this. But we're probably likely to experience a little bit of volatility, probably in the middle part of the week, and then as the market moves back up, have the volatility drift back down. So just this is kind of a sit on your weak hand, the week of sit on your hands. Maybe even next week it's going to be a sit on your weak hands, sit on your hands week. That's what I meant to say. Sitting on your hands means, for people that are traders, they use that terminology, and sitting on your hands just means I'm not doing anything. I'm not trading. I'm waiting for an opportunity. And so, and the truth is, if you're a trader, you should be sitting on your hands probably 75% of the time, if not more. So, looking for the right kind of opportunity. And that's kind of what we're doing here. That's one of the reasons I wanted to create this little channel, even though there's just a handful of you watching it. But I appreciate that. And hopefully you'll share it with other people that you know. As soon as this market starts to roll over, I'm sure there'll be more people visiting it and wondering what's happening and what's causing this and that. And truth is, nothing's causing it. It's just the ebb and flow of mood and markets, and it's just the way the markets move. Okay, let's look at the 13-week Treasury. You can see not a lot happened last week. Kind of got an indecision area, which could be kind of forecasting a run up here. Although we probably could use a little bit more pullback, but we could have another run up and then maybe a larger pullback after we run up. So maybe look for Treasury yields to go up this week, have the bond market sell off a little bit, and then make a larger pullback later on. All right, let's look at some of these countries. Nothing really. In fact, this week was kind of a quiet week in the market, except this German market. You know, that's the only one that was really, it kind of gapped up. Here, let's zoom in a little bit. You can see here that it gapped up from here. So that's a gap right there. And then ran up, you know, all week. Closed up here. So that's pretty strong, which tells me that we're probably in some sort of third wave there, which if in fact this is wave 1 and this is wave 2, we could be close to the end of wave 3. Might go a little higher, maybe up into this area, and then we'll get some sort of pullback and then a rise in wave 5. So it's when you're in the end of these moves, it's really hard to tell where you are, because you get a 4 and then 5 extends, and then you get another 4 of a different degree, and then 5 extends, and it gets really challenging. I mean, let me just go back to the Deneric chart. You can see here, this is 1 degree, so this is a 1 of larger degree, and I don't know what this degree is, but then here's another 1 of the next smaller degree, and then here's another 1 of a next smaller degree. So there's, in this chart, in this particular chart, there's 3 degrees of trend, 1, 2, 3. And you can see here it completes, this pink 1 or magenta 1 completes right here, but it also completes a larger degree 5. Okay, so the way the wave principle works, it's a fractal. Okay, so the market, it does the same thing over and over again, but it does it in larger and larger degrees of trend, which is what I've been talking about. So if you go to a very large, let me go back to the S&P 500 real quick, because I think I have it charted. If not, I have it on the Dow, so I'll look them both. But yeah, let me go to the Dow Jones Industrial Average, the Dow 30, and then let me take the studies off, hide studies, and put log on. Okay, so for example, if you were to, this is the 1929 stock market crash right here. It went down 89%. But let's just zoom in on this part right here. So this is a very large degree 1, very large degree 2, and then you can see a smaller degree 1, smaller degree 2. Here's a 3, and then a 4, and then a 5. But this 1, 2, 3, 4, 5 makes up this 3 right here. Can you see this 3 that I've got highlighted here? Okay. And then over the last 20 years, since 2000, so we had this top in 2000 that was very, very large. It was a wave 3 top. And then ever since then, we've been correcting in a wave 4. And so we hit the bottom of wave 4 was in 2009. And then this whole move has been a wave 5. So what do we know about Elliott wave? Well, we know that we correct back to the wave 4 low at a minimum. So we're correcting on the Dow back to 5,300 or so. Now that is a pretty good hit to your, investment portfolio. If you, in fact, it's comparable to the hit people took back in 1929. If I take this this high here that we're at right now, which is roughly in this area, and I go back to right here, that is a 76% decline in the market. Now, a 76% decline in the market is going to harm you very badly, I guess is the proper way to say that, if you don't take action. So that's the purpose of this channel, my program. This is what I wanted to do, because the problem with most people is they don't take action. They let the psychology start working on them, and then they're frozen, and they just watch their money just evaporate right before their eyes. And what we want to do is help you, if we can, help you hang on to your capital, so that when we have once in a lifetime buys, you'll have money, you'll have dry powder, so to speak, to go participate in that. It's a little bit of a detour, but thought it was necessary. All right, so we were talking about these different countries, and we talked about Germany being pretty strong. You can see it gapped up, ran up. Um, let's see, Japan. I wouldn't be surprised if it's still strong. As Japan's still creeping up there. Japan's doing. I mean, they're doing more monetary stuff than we are. It's really obscene that the Japanese people are being stripped of their wealth every day. I mean, it's unbelievable. Looks like the UK has an opportunity to run higher, at least to let's zoom in on this for a second. At least to the top of the trend here, right? At least to here, and maybe it gets there and pulls back, but then it could actually run all the way up to here, you know, or this blue box that we have here. Now, to me, the UK looks like it's in some sort of corrective mode here, so it might just get to the trend and start to roll over and sell off. But we'll be able to certainly, what you want to do is be looking for shorts in this area, and then have a real tight stop just above that. So that's kind of what you want to handle the UK market. If for those of you that are interested in that market, that'd be like the FTSE, the UK FTSE, stuff like that. All right, let's switch over to TOS charts and just pull up a few charts here. I'm going to pull up gold. Gold continues to pull back, although not nearly as much. And it may just be taking a break here. We might get some little rally. In fact, we likely will get some little rally and then have the market continue down. And my guess is we're coming all the way back to here. The only reason I say that is because this is pretty deep pullback, and it's likely some sort of C wave. You can see here we've got an A, and then an A, B, C likely, and then a return higher, probably to 1400 or more, in the larger degree wave C, which would then complete like a B. So I know that's complicated, but just think of it like this: that this is, let's zoom out. That this moved down. First of all, this is the direction of the larger trend. This up from the 1999 lows in gold, okay? Then you have an A, B, and a C pullback, okay? So we've had A, we're creating some sort of B wave, mid bull market, okay? And then we're going to get C down, okay? But B is likely to take the form of, and this is what I'm talking about. This is probably A, okay? And then you have kind of a smaller A, B, C. So I kind of did that in dash lines just to make it distinct, right? So you have A, B, C, B, right? And then you've got a C, a large C up, which will probably take us into this into this resistance area. So that's what I'm expecting gold to do. So if you want to be long gold, we need to wait for it, and it's going to be months probably before it pulls back into this area. And then we're going to be looking to go long gold again, and probably up into this area. If you have the ability to short gold, then wait for a smaller degree rally, which is something we should be starting probably this week. So you should get some sort of ABC rally up into this area around 1325 or so, and then look for the next move down. It's great short because it probably won't stop until it gets to around 11:30 or so. So if you're able to short gold, then by all means do. Silver is a little bit different. It looks like it's ahead of gold to me, and so silver's likely to, this is probably A as well, and then the B is probably, you could have an A, and then it could be kind of A, B, C, B, and then C down. So silver might not pull back as far, and then rally up here, and then pull back in a larger C wave. So, they work pretty closely together, but it's strange that they're a little bit, this one didn't quite go as high in this move up, and it's likely to go lower sooner and then bounce sooner, I guess is what I'm seeing. Oil, a lot of talk about oil this week. People think oil, that's it, it's time to invest in oil. I don't know. I mean, it could be. This, I think we're going to have a deeper pullback. I mean, it's just hard to believe that this is the only pullback we're going to get into oil. I mean, it wasn't even 50% retrace of this first move up. So, I'm still not comfortable going long oil. If you want to be long oil, I would be long somewhere closer to this yellow box, or maybe even a little lower. I don't think right here is a great place to go long oil. I'm going to switch to NinjaTrader for the euro and whatnot. I'm on the wrong. Apologize, I'm on the wrong time frame. So mainly I want to look at the British pound. We're going to look at them on a weekly chart, and we can look at the euro, US dollar, Canadian dollar, and the US dollar, Japanese yen. Those are the ones I want to look at. Those are the most important currencies in our markets, in the world markets. Okay, so let's look at the euro US dollar first. So here's the euro US dollar, and I apologize for the stuff on the screen. I'm not sure how to get that off, but it looked like to me earlier in the week the euro US dollar was going to consolidate and make a new high. It sold off through that. So if you go down a time frame, first of all, let's put a DP. Let's put a higher time frame DP here. Whoops, yeah, there it goes. And you can see we don't have one here, which is probably what we're creating now. We're going to get some sort of, it's going to stop going down, rally up, and we'll be able to take a DP off of this. Okay. But let's go to the daily right now and just look at this right now, and you can see I've got kind of a channel drawn, although it's not quite right there for whatever reason. Yeah, it's on the snap, so it's about as far as it's going to go. It might go a little higher, but then we'll roll over and probably make a new low down here, which will make a new swing, and then we can create a DP. And then what we ought to see is some sort of rally, and we could see a rally, to the underside of this blue line right here. So, once we come down here, kind of rally back up to, 1.8, 1.85, something like that, and then we should see a larger degree sell-off in the euro. The British pound, this was the previous low here, and this was the swing into the previous low. So the DP is off of this swing right here, this one that says TS2, and let me drag that over. Okay, now the next DP would be off this, because this is the high right here. This one right here is the high, so we'll take a DP off of this low. And that I've been waiting for a pullback in the British pound, because to me the whole larger degree move in the British pound looks like a huge ABC. So that tells me that the British pound is going to be bullish probably over the next couple of years or more. But right now we don't see any setups. You might get a little rally up and then kind of a setup to the downside. But the British pound, I wouldn't be long the British pound right now. You might wait a little bit if you're thinking about buying British pound. Now here's the previous high on the Canadian dollar, the US CAD. So what we want to do is we want to look at this swing down from the previous high and take a DP off of that. And what you'll see is that the Canadian dollar is in support right now. So you could be long the Canadian dollar, and if you wanted to be long the Canadian dollar, you might look to take profits in and around this 1.39 area, 1.4 area. So in other words, a move from here up. Now I could pull back a little bit. Let's see if there's any trade setups on the Canadian dollar. in the lower degree time frame. Not yet. So you could wait for a little ABC pullback, and that would be a great place to enter the Canadian dollar, and you get a decent run all the way up to here. So if you could trade from here to here, there's probably on a standard lot, you're probably talking about, I don't know, $2,000 gain or something there, with maybe only a $300 risk, which is pretty good. Let's look at the US dollar JPY. This is an important currency, but God, it's so manipulated and it's just crazy. I don't know what to tell you to do on that, but you can see here the swing into this low here. So we can take a DP off of that. This is the much larger degree DP support area. The shorter time frame support area is probably right here, because that's the most recent swing. But if you're long, the JPY is likely to move. You can see from this previous high a pivot off of that. So let's put one right there, and then go down to the lower time frame. And you can see here that there was a DP buy setup on the US dollar JPY. So if I put the trade setup on there, it's probably already run, or it's probably going to run to about 115 here, is my guess. Nope, didn't even go that far, 111. So we've already run the trade on that. If you want to be long US dollar JPY, you probably ought to wait for a little pullback, or wait till it maybe hits this area and then pulls back. Could do that. Currencies are going to be just huge opportunities, though, for people that are watching them closely. So I think last week I looked at the ES and the YM. I think the YM is probably more important from a long-term standpoint. So let's look at the YM on a weekly. Let me get my scale all right here. So you can see, and if we click on LA wave intermediate here, and I guess that's it right there. Click that. You can see we're in 5 waves. We've come to the minimum 5th wave. Obviously, we could go a little higher up here to the typical wave 5. So again, anytime you have 5 waves, you shouldn't be looking to go long. You should be looking for short trades in the next time frame down. So in the daily. So let's go to the daily and see if there's any trade setups. There's no trade setups right now, but there could very well be. You can almost see kind of a 5 wave here, 1, 2, 3, 4, 5. If the Dow gets a new high, you might see an opportunity to. Probably the best thing to do is wait for it to sell off, wait for a rally, and then on an ABC take a short down to the other side. So you can see that the markets are extended but still going up, and of course that is not unusual. They can extend for long periods of time and continue to make new highs. So we just want to be vigilant here and be careful and not get too aggressive on the long side. That's it for this week. I really didn't have any alternate research to share with you. I think that Dineric's Elliott Waves is a good place to look for charts if you want to stay on top of the charting process. You should see all this unfold here in the next, not more than 2 months. This should be finished before the year's over. This market should top before the year's over. So very, very careful. October's are usually fairly volatile month. So like I said, you could see this all happen next week, and then you could start to see a lot of selling into this 4th wave low, and then a run up in the final 5th wave. And this could be quite violent, coming to the top. It can be like a blow off top. So just be careful and don't get too extended in here on the upside. All right, everybody, thanks for coming in this week, and we'll talk to you next week. If you've got any comments, as always, you can comment in the comment section on YouTube, or you can go to @InvestorClass That's my Twitter handle. I guess that's what you call it, at Investor Class. And you can tell me I suck, or you don't like my analysis, or you think I'm crazy. This is going to all-time highs, and we're going to have a bull market for the next 15 years, or whatever you want to say there. I mean, you disagree with me. It's not going to hurt my feelings. It's certainly not going to hurt. It's not going to change the way that I invest for myself and my family. So, but I do appreciate the interaction, and certainly if you have something to show that you'd like to share with the rest of the people on here, that would be great too. So, but anyway, we'll talk to you guys next week. Take care. Have a great week. Bye bye.